Yeah, good morning, dear students. This is Suresh Babu MG from Government First Grade College, Gauri Biddu. As this is the series of lectures which is being uploaded on my YouTube channel. If this is the first time you are all watching, or anyone who is watching, please like and subscribe to this particular channel and press the bell icon to receive further notifications whenever the new video is updated here on my YouTube channel, which is SSD Benchmark. So as second year bcom C section and D section students, I have reminded yesterday, note was also given. Today you will be having the test, right? The provisions which needed to be followed for the purpose of redemption of preference shares. That is one question. And another question for today's session, which I'll be discussing right now along with you. This is the sum. This is the solution. Both here I'm explaining. The same sum would be given for the test as well, right? So let us see what it is. The seventh sum, yesterday, I have told many of you to do this, send it, right? That's a homework, and send it to my mail. But many of you have not done it. Today, it is once again, I'm asking, please read, copy, then solve, then come to class for writing the test. So the following is the summarized balance sheet of ABC Limited as on 31st March 2018. So liabilities and assets. Assets side, see, sundry assets you have 8,10,000 cash at bank, 10,000 rupees. Investments 80,000 rupees. Okay. Then liability side, you see 10% redeemable preference shares of rupees 100 is inner column 1 lakh, plus calls in arrears 1,000, outer column 99,000. Always remember, when redemption of preference shares has to be made, then this calls in arrears must be received. Only then you can repay to the preference shareholders, right? 50,000 equity shares are there, 10 rupees is fully paid. Note this is very important. Already 50,000 equity shares are there, worth 5 lakhs. General reserve, you have 1 lakh rupee. In this particular sum, you don't have profit and loss account. Note this is a divisible profit. Capital reserve 50,000 rupees. Creditors 1,51,000 rupees. Total 9 lakh rupees, right? For the purpose of redemption of preference shares, the company made a fresh issue of 4,500 equity shares of rupees 10 each at a premium of 10%. So 10 rupees is the face value, 10% is the premium, means 10%, 10 rupees is 1 rupee. So issue price is 11 rupee. 4,500 shares have been issued. 4,500 into 11, 49,500 rupees is received. 4,500 goes to securities premium, 45,000 goes to share capital, correct? So then, this is very important, general sense, right? Here, you need 1 lakh rupee share capital, correct? That's a nominal value. Here, you are getting from the shares 45,000 capital only, not the premium. So 1 lakh minus 45,000, 55,000 you need, correct? So that could be adjusted from general reserve. General reserve account at R2, 55,000 to capital redemption reserve account, 55,000. Why? Because 1 lakh you needed, 45,000 per share capital has been received by the issue of 4,500 equity shares, new shares, right? So that amounts 45,000. 1 lakh minus 45,000, balancing figure to be adjusted from general reserve. That is a divisible profit, one journal entry to be written for that. Okay. The issue was taken up and paid in full. Okay. The money on calls in arrears was duly received in full. That's what I have already discussed then. The investments were sold for 75,000 rupees. Investment check here in the balance sheet, you have got 80,000 rupees. Okay. Now it is being sold for 75,000. That means difference is loss. So here there is no profit and loss account. There is general reserve. So hence, this loss 5,000 rupees to be debited to general reserve account. What is the journal entry? Bank account data 75,000 debit. General reserve account data 5,000 debit. To investments account, 80,000 credit. That is the way, that is how you need to draw the journal entry. Correct? No? The preference shares were redeemed at a premium of 10%. So, 1 lakh rupee preference share capital, 10% of 1 lakh is 10,000. So, preference share capital accounted are 1 lakh. Premium on redemption of preference accounts accounted are 10,000. To preference shareholders account, that is 1 lakh 10,000. Okay. Now, write journal entries to prepare the balance sheet. See, one of the student Vidyashri, I think, she has written it. Now I am explaining. Wherever she has done some variation, I have corrected. Okay, check here. Homework, corporate accounting. Okay, she has written serial number, particulars, ledger folio, debit and credit. So, lines to be drawn whenever you write the journal entry. You have to ensure. Okay. What is the first entry? Bank account data 1,000. Two calls in arrears account 1,000. Correct. So this is correct, right? Being calls in arrears received. Okay, na? Second journal entry. Redeemable preference share capital account data 1 lakh. Premium on preference shares account data 10,000. Two preference shareholders account 1 lakh 10,000. Correct. This the second journal entry is also correct. Third journal entry. Bank account data 49,500 because new shares are issued. Correct? 4,500 into 11 rupees, 49,500. To equity share capital account, 45,000 credit. To securities premium account, 4,500 credit. Okay. So being fresh issue of 44,500 equity shares are of rupees 10 each at 10% premium. That's the right. Third one is also right. Now the fourth one, you should write like this because investments you are making the sales. Bank account data 75,000 debit. General reserve account data 5,000 debit. Why? This is the loss. Loss to be debited. Usually we debit profit and loss account, but here we don't have profit and loss account. That's the reason why general reserve is given. General reserve could be adjusted. So to investments account, 80,000 rupees credit. Okay. Being investment sold at loss. Understood? Then now you need how much? 55,000 you need for what? Capital redemption reserve. Because 45,000 rupees new shares you have received. Correct? No? So now journal entry. General reserve account are 55,000. To capital redemption reserve account 55,000 credit. Being divisible profits transferred to CRR, capital redemption reserve. Okay. Now capital 1 lakh rupees adjusted. Now what is to be adjusted? Premium to be adjusted. How much premium you need? 10,000 rupees premium you get. So here, third journal entry observe. So here, how much premium has been received? 4,500. How much more you need? 5,500. Where to be adjusted? Divisible profit, that is general reserve. Next journal entry, see. So, fifth one, correct? Now, sixth one is correct. Okay, sixth one, you should be looking here, sixth one. I have not written. Sixth one is right. Fourth and fifth, I have altered, right? Fourth and fifth, don't copy these two, but this one you can copy, sixth one. Securities premium account data, 4,500. General reserve account data, 5,500. Two, premium on redemption of preference shares to be written here. Premium on redemption of preference shares, 10,000 rupees. Being, right? Securities premium and divisible profits transferred to premium are utilized. You can write. So now you have 1,10,000 rupees in your hand, correct? Because investments were also sold. You made the arrangement. Now you write redeemable preference shareholders account data 1,10,000 to bank account. You are making the payment. 1,10,000 debit, 1,10,000 credit. Being redemption of preference shares. Over. Journal entry, 7 journal entries over. Now there is balance sheet. Okay. So there was some change. So I have incorporated here. See, this is a balance sheet I have recorded. Shareholders funds, right? Share capital. Below that, share capital. So here I am writing equity share capital. 1 minute. Equity share capital. How many equity shares are there? Oh, I'm sorry. What should have been done? Oh, I'll write here. 1 million. 1 million. Okay. Okay. Assume this 5,45,000 to be written here. If it is not possible, what I'll do, I'll write here 5,45,000. It is not coming. Okay, it is moving. So now I am writing here that I could not write. Here I will add 5,45,000. This is missing. Let it be. So shareholders fund, share capital. How many shares are there? 54,500 shares. How come? In the balance sheet check, 50,000 shares were there. Additionally, 4,500 shares you have issued. Total 54,500 into 10 rupees, 5,45,000. Now, next heading, reserves and surplus. So reserves and surplus under general reserve. Okay, general reserve. How much you had? 1 lakh rupee you had. Minus 5,000. Investments you sold. There is a loss, 5,000. Okay, minus 5,000. Minus 55,000. From general reserve, you transfer to capital redemption reserve 55,000. Minus 55,000. Next, minus 5,500. What is that? So for the purpose of securities premium, you have used 5,500. So here, 55 plus 5, 60 plus 5, 65,500. If you subtract from 1 lakh, we are getting 34,000, and that's the balancing figure which is available in general reserve. Then capital redemption reserve, right? We have created newly. That's a new journal entry, 55,000 rupees. Then capital reserve, we have not used in the balance sheet as it is. It continuing 50,000. And creditors, 1,51,000, right? The total 8,35,500. Okay. So what I have done, balance sheet, liability side I have written. Asset side I have not written. Asset side, what this girl has written is right. B, assets. Okay. What is sundry assets? 8,10,000. Cash at bank, 25,500. Total 8,35,500. How you get it? Okay. So working note, cash at bank was 10,000. It's there in the balance sheet. Investments you are selling, you are realizing 75,000 rupees cash, 85,000. Okay. Fresh issue of shares, you have made 49,500 rupees cash is received. So you write it. Calls in arrears you made, 1,000 rupees is received. Total 1,35,500 rupees has been received. For this, out of this, preference shareholders, how much money you are making? 1,10,000 minus 1,10,000. Now you are getting 25,500 rupees. So which has been recorded here, cash at bank, correct? So open up your eyes properly, widely, look into, copy it. I think Neha said yesterday in the feedback, she could not understand. That was the confusion. Okay. Let the confusion occur. Confusion is occurring means your mind is working. Really, I have to appreciate. Correct? So that's the reason why what my suggestion, refer, review, replay. You want 50 times to replay? Replay. So it doesn't cost you anything. Okay, only time. So please ensure that today there is test. So I'm listing as usually. Don't say you are not prepared. Those who are missing for the test, it is the representatives, please inform. Or if they don't turn, okay, let them forget about internal assessment marks. Very simple. Okay. So you work hard, you get. Otherwise, you don't want work upon external exam purpose, only 60 marks there. So completely we secure, no problem at all. This is Suresh Babu from Government First Grade College. Wishing you all the very best and happy Tuesday to everybody. Thank you.